So Bitcoin.
Yes, sir.
That's your motherfucking thing.
Yeah.
And you done partnered with Cash App and everything.
Everything.
To create black billionaires. You correct the nigga when he said millionaires. We need more than a million. We need $1 billion to split with black children. Fuck the name, get a building. Take money to the ceiling. Get your girl pregnant every month. Whoop your son if he smoke a blunt. Tell your daughter to go to college. If she twerk, do it with class and some knowledge. Keep the furniture polished. Buy a couple shirts that got some few collars. Invest all of your dollars and get some capital.
What up guys, Nakamoto Crypto here. Institutional investors are buying Cardano as a Canadian company named the Graph Blockchain has just decided to put a $300,000 bet on ADA. Stay tuned, like and subscribe. Let's get to 1,000 subscribers. So the narrative of institutional investors only buying Bitcoin is about to be dead, as these guys are now putting their money into these alternative coins. And we have already seen in the past few weeks institutional investors buying altcoins, as one of the biggest firms in Dubai, FD7, has just decided a few weeks ago to put $750 million of their own money into Cardano and Polkadot, and this money was converted from their Bitcoin holdings. Right after that, the rockstar Gene Simmons has decided to put an additional $300,000 from his crypto portfolio into Cardano's ADA. And now we have got this, the Graph Blockchain, which is a Canadian developing company for basically graphic data analytics to speed up the blockchain control system for businesses but also governments. And this company is tied to major institutional investors. They are now putting $300,000 of their holdings into Cardano, and who knows, if they put in the good word to these governments that they are tied to, Cardano will definitely see a mass adoption. Even the Graph's CEO Paul Haber has stated that they are not stopping here. They do hold Bitcoin, but they were looking at diversifying their portfolio, and that's when Cardano came into the game. They believe in Cardano's potential for smart contracts to implement solutions to facilitate mass adoption on the decentralized blockchain. They even gave their employees options to purchase a portion of the 12 million shares that the company currently hold, and this is major. The Bitcoin maxis out there are always stating that the institutional investors are only buying Bitcoin. Well, this here is another example that the institutional investors are also buying altcoins. They pick up fast, they do their research really fast. Back in 2017, it was only retail into Bitcoin, and now you have institutions, and the institutions are going in heavy now into these alternative coins. And there's a reason why they are jumping into coins like Cardano. It's a third generation blockchain, and it has the best potential, in my opinion, on top of all of these other altcoins. With the anticipation of Gorgon coming in, Shelly has already successfully rolled out back in 2020, and staking was introduced into the Cardano system. If you remember, Cardano has migrated back then from a Byron proof of work system to a delegated proof of stake system, and since then almost over 80% of the Cardano network is now being controlled by delegated stake pools, making Cardano more and more decentralized every single day. Right after that, we've had a few upgrades, the Mary hard fork being one of them. It was successfully implemented, and soon we will see Alonzo and then Gorgon. When Gorgon comes, smart contracts will be able to be written and made into the Cardano network, facilitating transaction fees in the DeFi sector. A lot of these DeFi projects will be migrating from Ethereum to Cardano. Ethereum seems to be taking a little longer in terms of rolling out their Ethereum 2.0 system, which they said that would facilitate the transaction fee problem, the gas fee problem that Ethereum is having right now. Another example of that is NFTs. People want to buy NFT, but they just cannot do it right now because of Ethereum gas fees. People want to get into a lot of DeFi projects and platforms. People want to invest their money into platforms like Uniswap, SushiSwap, and so forth. But a major put-off happened when they want to do that because of Ethereum's gas fees. So there you have it. Institutional investors are doing their homework and they are now investing into projects which has huge potential in the future. Bitcoin, on the other hand, is still going through basic supply and demand economics. So what exactly affects the supply and demand of Bitcoin? Number one is the mining process, created way back in 2009 by Satoshi Nakamoto to facilitate and regulate the number of Bitcoin on the blockchain, with new blocks being created and new Bitcoins coming into circulation almost every single day. The second thing is the Bitcoin halvings, a major event that happened every 4 years when 210,000 Bitcoin are mined within that 4-year range, cutting the mining rewards in half, making the price of BTC more and more scarce. The last halving occurred back in 2020, just last year, and the mining reward of BTC was cut in half from 12 BTC per block to 6.25 BTC per block. The next halving will occur just a few years from now, which is 2024. So if you are new into the cryptocurrency game, right now is your chance. Forget about this bull market in terms of you making money, but you have the opportunity to be extremely rich leading up to the halving of 2024 by just investing little by little, dollar cost averaging into Bitcoin and some of these altcoins. As if you did that back in 2017, right now you would have been rich. If you bought at the top back in December of 2017 when Bitcoin was almost nearing at $20,000, you caught the falling knife all the way to March 2018 when Bitcoin dropped from 20,000 down to 3,000, and then you picked up the momentum, still dollar cost averaged, going into 2019 when Bitcoin went back up to $14,000 per BTC, and then the same thing happened again. It dropped from 14K all the way down to $3,600 in March of 2020, and then a few months after that the halving event happened, and we all know every time a halving happens, Bitcoin enters into a new bull cycle. And when that halving happened, BTC went from $3,600 in March all the way up to almost $60,000 per single BTC. That is the power of Bitcoin. A few other things that affects the supply and demand of BTC is the exchanges drying up the supply every single time because people and institutional investors are buying it on a daily basis. So it's not only retail, usability and adoption, the adoption of Bitcoin when people want to use their Bitcoin now to buy their Teslas and properties and real estate, increasing the interest into BTC worldwide because the companies selling these products, selling these real estates will now come in contact with Bitcoin, discover it, research it, and who knows, they will definitely buy it in the future, which will make Bitcoin more and more scarce and the most scarce asset on planet Earth, with only 21 million units being able to ever be minted. BTC's way from this point on is only up. So what are your thoughts on institutional investors buying Cardano and also Bitcoin being more and more scarce and harder to get? Let us know in the comment section below. Like the video, share, subscribe for some daily crypto content. I have been Mr. Nakamoto Crypto, and I'm out.